Ben ritrovati lunedì mattina su Florida New York Stock Exchange, flessioni pesanti in Europa, flessioni pesanti anche qui a Wall Street. Ne parliamo con il mio ospite qui su Florida che è Kenneth Polcari, Managing Director per ICAP Equities. Kenny, welcome back.
Thank you very much. It's a pleasure to be here.
So Kenny, this morning we have seen the euro going down 121, I mean, briefly, but it went down that level. In Europe, we have seen like big problems. All the markets are down. The spread in Italy and in Spain, and here in US, we're seeing the same Europe effect.
Right. But see, what's really funny is that what we saw this morning coming out of Europe, and really what started on Friday apparently, and then over the weekend, is really more of the same, right? It's concern over the Spanish debt crisis, concern over bond yields, concern over Italy, concern over Greece. It's really the same story that got rehashed. We entered kind of a quiet period for some, 2 or 3 weeks of really where there wasn't a whole lot of news out of Europe, and the market tried to move beyond that and focus on U.S. macro data, U.S. earnings, and all that stuff. And in fact, it looked like we were doing that. The market rallied a little bit, and then boom, the minute they start talking about Europe again, it trumps everything. And so it really tells you how nervous the market still is over what the situation in Europe continues to be.
Yeah, and we also saw the VIX really spiking this morning for the same reason, really showing that the market is very nervous.
Right.
And the market is not even finding good news here in U.S. I mean, you were mentioning the earnings season. We had some good numbers from some companies, but it seems that the big American companies are really struggling to generate revenues in this kind of economy.
That's right, and and it makes perfect sense when you think about a slowing global economy. You think about what's happening, because listen, big U.S. companies are doing business around the world, so slowing growth in Asia, slowing growth in Europe, a crisis in Europe, slowing growth, in other emerging markets. And so that makes perfect sense. And so the market's just kind of reassessing and reevaluating and listening to what the future projections are going to be. Listen, the earnings that they're reporting have already happened. That's done. People want to know what's it look like going forward. And in fact, we're getting even weaker projections going forward, which should cause the market to certainly reprice. And when it does, that will create the long-term opportunity, but you have to have the stomach for it, right?
And also because we have seen still more bad news coming from other big economies like China.
Right.
We had words that the economy could even be slower this quarter. They're talking about 7.4% for the GDP.
Listen, which is still good, but it's down from higher rates that China had. So I understand 7.4% is not a bad, in our view. We would love to have 7.4%, but in China, certainly it is a slowing. And listen, this week, we're going to get a lot of U.S. macro data. GDPs, they're going to come out with GDP, and I think the number is expected 1.4%, which is down from the revised from final first quarter revision of 1.9. And so therefore, that just shows you further weakening. And so it makes perfect sense that you'd have, some people taking money off the table. But don't forget, when there's a seller, there's always a buyer. So there are plenty of people that are willing to buy, but they're willing to, the buyers are the ones setting the price. You want to sell it? Here's what I'm willing to pay. Depends on how nervous the sellers are really going to get, is going to dictate how much pressure we get on the market.
So now tell me, where is the market is heading? We are really monitoring important technical levels, a lot of U.S. macro data, you were saying, a lot of results from technology. What is going to happen?
Well, we're testing right at 1334, which is the 50-day moving average on the S&P. I think we're finding some support there at the moment. We don't have a lot of volume, and so that's something just to keep your eyes on. You should get more nervous if you see volume really pick up on these down days, because then you'll get, you'll certainly get much more pressure. I do think, though, as we move through the rest of the summer and earnings season, that we will see the market kind of churn and get weaker still. I think it wants to test the 200, but at the 200-day moving average, I think it'll find plenty of support, because listen, when you think about it, we're like the prettiest girl on the block at the moment, right? I mean, when you talk about all the global markets, so ultimately money still is going to come to the United States, but it's going to be much more selective in where they jump in. That's why I think down at the 1300 level, 1303, 1305, you'll find real support.
And when do you think politics will kick in? When we'll see like the polls really starting influencing the market?
Well, I think, as we get into September, right after the Republican convention and then the Democratic convention. But listen, you're already getting kind of snippets of information, right? Last week we heard that Obama is in fact starting to struggle. His campaign is starting to struggle. On the other hand, Republicans and Romney aren't really yet taking advantage of that. And so some people are thinking, well, maybe the Republicans are going to miss the boat here. But I do think that after you get to conventions, after Mitt Romney picks a running mate, we already know who Obama has. So the market's kind of waiting to see who Romney picks. And then you'll start to get much more focus on what the election is going to look like. But that'll take us into September. And then the last couple of months, September to November, the market will focus. It'll all be about the election.
We'll see. Thank you very much, Kenny, for being with us.
It's always a pleasure. Thanks for having me.
E grazie a voi per l'attenzione. A domani.